Welcome to Smart Stock Watch. Today is April 14th, 2025, and we're diving into the latest earnings report from Kestra Medical Technologies, a leader in wearable medical devices and digital healthcare. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Kestra has been making waves in the medical technology space, and their Q3 FY2025 results are certainly worth discussing.
Revenue and profitability overview. Let's start with the top line. Kestra reported a revenue of $15.1 million for Q3 FY2025, marking an impressive 82% increase compared to the same period last year. John, what are the key drivers behind this growth?
Absolutely. The revenue growth is primarily driven by a higher share of wallet at existing customers and the activation of new accounts. Additionally, Kestra benefited from a higher mix of in-network patients and improvements in their revenue cycle management capabilities. This has also contributed to a significant improvement in their gross margin, which increased to 43.4% from 10.6% last year.
Despite the revenue growth, Kestra reported a net loss of $21.8 million. Can you elaborate on this?
Yes, the net loss is largely due to increased operating expenses, which rose to $27.1 million. This includes growth in commercial and revenue cycle headcount and a $1.9 million increase in professional services expenses related to their recent IPO.
Strategic initiatives and market expansion. Kestra recently completed its IPO, raising $205.2 million. How is the company planning to utilize these funds?
The proceeds from the IPO are expected to support Kestra's expansion efforts, particularly in growing their commercial organization and enhancing their revenue cycle management capabilities. Additionally, they've signed in-network contracts with more insurers, now covering over 285 million health plan members in the U.S., which is a significant step in expanding their market reach.
They also appointed a new Chief Commercial Officer, Al Ford. What impact might this have?
Al Ford's appointment as CCO is a strategic move to bolster their commercial operations. His experience will be crucial in driving Kestra's growth and market penetration, especially as they continue to expand their presence in the wearable defibrillator market.
Financial outlook and future prospects. Looking ahead, Kestra has provided a revenue outlook for fiscal year 2025. What are they projecting?
Kestra expects their revenue for the fiscal year ending April 30th, 2025 to be between $58 million and $58.5 million, which represents a growth of approximately 109% to 110% compared to fiscal year 2024. This optimistic outlook is supported by their strong market position and strategic initiatives.
With a cash position of $54.4 million as of January 31st, 2025, how does Kestra plan to sustain its growth?
Their robust cash position, bolstered by the IPO proceeds, provides a solid foundation for continued investment in their growth strategies, including expanding their product offerings and enhancing operational efficiencies.
Key takeaways. In summary, Kestra Medical Technologies has reported strong revenue growth and improved gross margins for Q3 FY2025, despite a net loss. Their strategic initiatives and recent IPO position them well for future growth. John, any final thoughts on Kestra's investment prospects?
Kestra's focus on expanding their market reach and improving operational efficiencies is promising. While they face challenges, their strategic direction and financial outlook suggest potential for long-term growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Kestra's performance in the comments below.